Okay, so good day to all. I hope you are well, and I hope that this video will give you enlightenment on the various topics that we'll be going to discuss to you. Possible, it will be included in the exam. So I'm so sorry if wala na to na dayon na to face-to-face class because as you can see earlier this morning or earlier this day na busy kayo ang faculty nagapanel og mga presentations. So, congratulations pala on your presentations for a job well done for your innovation management presentation. So, here for today, no, for this video, I will be discussing about various topics starting with the absorption costing approach to cost plus pricing. So, in here, since we tackled or we talked about the absorption costing last midterm. So in this topic, it would be incorporated with the cost plus pricing or the final price of the product that you will be selling. Okay. So to review, you guys for the absorption costing. So under absorption costing, the companies treat all manufacturing costs, including both fixed and variable manufacturing cost as product cost. So basically, under absorption costing, all those direct material, direct labor, manufacturing overhead, be it fixed or variable, will be subject or will be included in the computation of your cost or your product cost. So, di ba, usually kita mag-compute product cost will be like for variables like direct materials, di ba? Yan. So, in this one, no, we will include the fixed manufacturing overhead for our product cost. Okay, so last time we have a graphic representation of the comparison of absorption costing and variable costing, right? So for absorption costing, as you can see here, so no, direct materials, direct labor, variable manufacturing overhead, and fixed manufacturing overhead will be used to compute for your product cost, while for period cost, no, it's variable sales and administrative cost and fixed sales administrative cost will be on your period cost, or shall we say we will uh, call that your expenses incurred for the whole for the period, right? So in absorption costing, product cost will be the basis of our cost. Okay, just to give you an example based on your module, no, review na lang natin. Company A is a manufacturer and seller of a single product. In 2016, the company reported the following cost. So, no, si company na group siya into variable and fixed cost. So in here, no, variable cost per unit, we have direct material, direct labor, variable manufacturing overhead cost, variable selling and administrative cost. For the fixed cost, we also have fixed manufacturing overhead cost and fixed selling and administrative cost. So over the year, the company sold 50,000 units and produced 60,000 units with a unit selling price unit of, uh, this is actually 100 units yun siya. So under the absorption method of costing, the unit product cost is calculated as follows. So actually, I can't go back with my slide because restrict siya upon recording. But you can look at your module, or you can look at this PowerPoint presentation that will be uploaded together with this video. So under the absorption method of cost, no, the unit produced or the unit product cost is calculated as follows. So under absorption costing, no, all those direct materials, direct labor, and manufacturing cost, be it fixed or variable, will be included in the product cost. So that means the 25 pesos for direct materials, 20 pesos for direct labor, and a factory overhead, variable factory overhead of 10 pesos, plus fixed manufacturing overhead divided by 60,000 units, because that is the number of units produced no, number of units produced in this problem. Not we are not talking about the selling, no, number of units sold, but we're talking about the number of units produced because that is our basis of our costing, right? So in this one, no, we can come up with a 60 pesos unit product cost under absorption costing. So again, recall that the selling and administrative cost, fixed, be it fixed or variable, are considered period costs or expenses for the period, and are ano at is not concluded in the product in the computation of your product cost. So again, under absorption costing, just a review for you guys, direct labor, direct materials, manufacturing overhead, be it fixed and variable, will be included in the computation of your product cost. Okay, next now is the cost plus pricing. So another topic that we're going to do is the cost plus pricing. That means cost, ada natin ng markup or fixed, no, on a fixed rate of markup will be called cost plus pricing. So under cost plus pricing is a pricing method used by companies to determine the price of a product or service. It involves setting a price by adding a fixed amount or percentage. So basically, kung may to cost plus pricing, if ang cost of ang product pag-produce is 36 pesos, and then for us, na ibaligya siya, na to, tubuan na to siya of like, for example, 50%, then 36 pesos plus for 50% of 36 pesos will be your price. Yun siya. So the cost plus pricing formula is calculated by adding material, labor, and overhead cost and multiplying it by 1 plus the markup amount. So we yes, yun siya. So we have an example of cost plus pricing here. So let's just say that you started a retail clothing line and you need to calculate the selling price for the jeans. So here are the costs to produce one pair of jeans. Okay, so we have this data. Material cost is $10, labor cost is $30, and overhead cost is $15. So let's just say that this absorption costing. So wala man giingon sa overhead cost if fixed ba siya or variable. So let us assume that the overhead cost will be also included in the computation of your product cost. Okay, so the total cost adds up to $55. So with a markup of 50%, the formula would look like this. Yan. So ito, no, the the selling price, yes, the selling price is 55. No, selling price is 55. The cost is $55. Then the situation is not the markup na 50. That means we add 1 plus 0.50 because we have to convert this percentage into decimal point, so that will be 1.50. So 55 pesos, $55 times 1.50 will be 82.50. So this gives you a selling price of 82.50 for each pair of jeans. Yun siya. So again, this cost plus pricing will be utilized, no, if you have a fixed amount or percentage that you add up to your cost for your price. Okay, so now let us incorporate the two topics to the absorption cost approach to cost plus pricing. Yun. So in this situation, ABC company is in the process of setting a selling price on a product that has just undergone some modifications in design. So the following cost estimates for the redesigned product have been provided by the accounting department. So these are the details provided by accounting department in ABC company. So the costs above are based on the anticipated volume of 5,000 produced and sold each period. Alright, so di siya makita, no? So it is said now that the company produced 5,000 in production, and luckily it was sold, no? Tanan mismo na pulse lang na sold, and the company uses cost plus pricing with markup rate of 60%. So that means with the cost, 60% of that cost will be add up to its cost para mo siya ang price. So assuming that the company uses absorption costing approach to cost plus pricing, how much will be the target selling price? So since nag-anticipate sila of volume which is 5,000 to produce and be sold, that means we also need to undergo computation on the target selling price based on this data. Okay? Yan. So ito, since we are using absorption cost approach or absorption costing, so all those direct materials, direct labor, and manufacturing overhead, be it variable and fixed, will be used, no, will be used um, to compute for your product cost. Yan. Okay. So since we have, no, okay, since we have um, those details, so i-total natin yung mga direct materials, direct labor, manufacturing overhead, and fixed manufacturing overhead to get the total cost, no? So since uh, total manufacturing cost yun, total manufacturing cost. So all those direct materials plus direct labor plus manufacturing overhead, variable and fixed will be the total cost. So since the business or the ABC company anticipated the units produced of 5,000, so that means in getting or in producing the 5,000 units, they will incur 345,000 as total manufacturing cost. So that would give us 69 pesos cost per unit. Okay? So since the business uses na cost plus pricing with 60% markup, so that means this 69 pesos, we will get that 60% and add up to the cost that will give us a 110.40 pesos target selling price. Okay? So you just need to add 1 plus 60% to get this 1.60 and then multiply it by the cost which is 69 to get this 110.40. So I hope that clears all this absorption cost approach to cost plus pricing. Okay, next topic natin will be the costing in a multiple discrete process industry. So there are instances that the business will have multiple products. So it's very important that they know how much they will charge for the cost, no, in every product. Kaya dili man pwede nga pare-pares sila cost because there are times na dili naman sila makaparehas. They will incur different costs. They will incur different um, materials, yun. So in a firm with multiple products, however, the benefits of more detailed costing often outweigh the cost. So in this cost flow program, no, we can see that all those cost pools, direct materials, direct labor, and the manufacturing overhead are divided into these two cost objects, or these are the products of the business. So it will be allocated, the direct materials, direct labor, or manufacturing overhead will be allocated with these two products. Okay. So, say for example in this scenario, okay, wala na siya. Yun. So, ano ba yun? So, anyways, balik muna tayo mamaya. So, to get the predetermined overhead rate, because in that problem the manufacturing overhead is wala pa siya naka-allocate for the different products. So brag na total gitotal pa mismo ni company og pila iyang overhead cost. So that means for us as accountant, no, we have to divide or we have to allocate those overhead costs with two different products nga naa sa kumpanya. So in this one, we have this the formula in determining the overhead rate. So we have estimated overhead over estimated allocation base. So for you to have no to have a lang kanang idea, kay wala na ko siya na show kanina kay nag siya, di na siya mabalik. So you can just see sa ato PowerPoint presentation and then compare here sa ato ang formula. So our overhead or manufacturing overhead natin is 180,000. And then since the problem uses direct labor hours as our allocation base, so that means our over here is the 5,000 direct labor hours as our allocation base. So that means our predetermined overhead rate will be $36 per direct labor hour. Right. So since we got the direct labor predetermined overhead rate, okay, so we can now use the cost system to determine product cost for C27S and C20S for range boats as shown in Exhibit 6.5. So using the 36 pesos or $36 per direct labor hour predetermined overhead rate, so we can allocate overhead to the two products. So since no wala pa man to diri ang overhead, manufacturing overhead na numbers kay ganiha 180 pa to siya, since we undergone predetermined overhead rate for these two items. So since we have computed that $36 is our per direct labor hour predetermined overhead rate, so we will base our answers here with a direct labor hours because mo ni siyang atong allocation base nga giingon ganiha, the 5,000 allocation base. So for that 5,000 na ay 2,000 direct labor hours si C27S and 3,000 direct labor hours si C20S. So that means mo na siya atong allocation base. So with $36 na predetermined overhead rate, we multiply that 36,000 to the direct labor hours of C27S, which is 2,000, to get the 72,000 dollars. And then C20S, which is 3,000 labor hours, to get the 108,000 manufacturing overhead rate. Okay? So, yan. So, we can now get the total cost of the product, which is the C27S, 184,000. And then the C20S is $222,000. So, out of this cost, we can have a cost per unit of 18,400 because the units produced is 10 and the $7,400 as cost for C20S because the units produced is 30. So, yun. Right, so let us have another example for the cost plus, I mean, product costing of multiple products. So, in here, ABC Company produces two sleeper models. So, date on operations and costs for August follows. So, these are the details for Model 1 and Model 2 and the total. So, in here, no, we have cost for direct labor, direct materials and direct labor, but we only have the total manufacturing overhead cost. So in this way, in this scenario, we have to allocate the manufacturing overhead cost for model 1 and model 2 to get total cost as well as to get the cost per unit for the two models, no? E di man nato makuha ang total cost niya o cost per unit if wala pa tay na allocate diri isa-isa sa ila for manufacturing overhead cost. Okay? So again, we will use machine hours. So example lang na siya, depende na po na sa company kung sa ilang allocation based ng buhat. But in this scenario, we will use the machine hours to allocate overhead cost. Okay. So again, since we have this formula, predetermined overhead rate equals estimated overhead over estimated allocation base. So since in the given the overhead rate natin no is 160,000 and then our allocation base is 5,000 which is machine hours, we can now get the predetermined overhead rate of 32 pesos. Okay. So this is now the answer to our problem. So since kanina wala pa tayo na putang diri sa model 1 and model 2 for manufacturing overhead cost. So since we undergone predetermination of the manufacturing overhead cost for model 1 and model 2 and we got 32 pesos per direct labor hours or direct machine hours. So, asa gikan ni 96,000 sir for Model 1. So, since we have 3,000 machine hours, we multiply that by our predetermined overhead rate of 32 pesos. So, makuha na nato ang 96,000 na manufacturing overhead cost. As well, for Model 2, since ang iyahang machine hours is 2,000 man and then the predetermined allocation base or predetermined overhead rate is 32 pesos, then we can now say that the manufacturing overhead cost for Model 2 is now 64 pesos, 4,000 pesos. So to get this one, no, so 96 plus 64,000, then we are right that the total manufacturing overhead cost is 160,000 pesos. All right. So since we have now the manufacturing overhead cost, we can now get the total cost. So again, we can get the total cost by adding all those direct materials, direct labor, and manufacturing overhead costs now to get the total cost. So this is the total cost for Model 1 and this is the total cost for Model 2. Okay, that is now our second answer to the problem. The first one is we determine the overhead rate. The second one is determine the total cost of each model. And the third one is to determine the cost per unit. So since the the unit produced for model 1 is 1,250. So total cost 226,000 divided by 1,250. We can now get the cost per unit of 180.80. And for model 2, since the total cost is 174,000, we divide that by the units produced, which is 550 units. So we can arrive with 316.36 cost per unit. Okay, so so let's go now to our next topic, which is the job order costing. So this is the last topic that might be included in your exam. So basically, this job order costing is in the module 6. So you can just read the concept and application of this one. But I just want to highlight the predetermined the formula for this one, no? The predetermined overhead rate. So same with kanina, that since the multiple products, since ang company has undergone the total manufacturing cost, so we have to allocate the uh, overhead rate, the total overhead rate to each of the, to each of the of the items or the products. So in this one, we also need to to determine the overhead rate for the job. No, so we can use this formula, estimated overhead cost over the estimated units to be allocated. So this is based on the cost allocation, or I mean the cost pools that we need to include in this in this solution. Okay, so say for example that the for this example, no, software costing in a service company. So basically, there's no product that can be sold, but rather service. So usa mo na to na siya pag-cost. So since Rivera Associates is a law firm specializing in labor relations and employer-related work. So it employs 25 professionals. We have 5 partners and 20 associates who work directly with its clients. So the average budgeted total compensation per professional for 2021 is 104,000. So each professional is budgeted to have 1,600 billable hours to clients in 2001. Rivera is a highly respected firm, and all professionals work for clients to their maximum 1,600 billable hours available. So all professional labor costs are included in a single direct cost category and are traced to jobs on a per hour basis. So that means our direct labor hours is 1,600 hours. So yun man yung billable hours nila, no, for those 25 professionals. So all costs of Rivera and Associates other than professional labor costs are included in a single indirect cost pool. So aside from the direct labor hours, we also have indirect cost pool, the legal support, and are allocated to jobs using professional uh, labor hours as the allocation base. So budgeted level of indirect cost in 2001 is 2.2 million. So in this problem, no, aside from the predetermined overhead rate, we also need to get the predetermined indirect cost rate. Yan, kasi may sinabi siya dito na indirect cost. So with this given data, we can solve for this problem. So as you can see, the budgeted professional labor hours direct cost. So since the direct labor compensation based on the problem is 104,000, so lagay natin sa numerator yung budgeted total direct labor compensation, which is 104,000, and over the allocation base or allocated allocation base natin, which is the direct labor hours, which is 1,600 hours to get the professional labor hour, or per professional labor hour, right? So that is the budgeted professional labor hour direct cost rate. So next is the budgeted indirect cost rate. So since we have indirect cost pool based on the problem, my indirect cost na na-incur, which is a total of 2,200 hours over total professional labor hours. So that means per professional or per person na mag-incur ng 1,600 hours will be budgeted with indirect cost. So that means 1,600 hours billable hours per professional times 25 professionals, because we have 5 partners and 20 associates, so a total of 25 professionals. We have to multiply that with 1,600 billable hours. So that means they have 40,000 professional labor hours for this one. Okay? So divide lang natin yung indirect cost pool, which is 2,200,000 divided by 40,000 hours. So we can say that the budgeted indirect cost rate for this problem is 55 pesos per professional labor hour. Okay, so for questions, you may want to ask that in our GC for others to know podno kung unsa inyong concerns regarding the topic. And then thank you so much guys for listening. If you didn't get the the topic or discussion, you may want to review that over and over again. This is the very the advantage in having this recording, because you can uh you can sa tawag anyway, you can review or you can replay the video for you to understand the topic. And if dili jud siya, you can ask me or you can ask sa GC pod para makabalo ang uban. And then since I will be uploading this after I will export this video, so basically mga tomorrow siguro I will be giving you your topics for the reporting, since mo na atong last na requirement for your final grade. So I hope that you have understood something. I hope so nga na-ajud. And then good luck and God bless on your exam. I hope na dili na ta magkita sunod ani nga subject. Okay? Thank you so much and have a great day guys. Bye!